Why does the bank charge you an early repayment fee? Well, there are actually two types of that fee. First of all, is from the speed limit concept. You know, banks typically they would let you to repay an extra 5% per year as a standard quota for most banks. But when you are paying more than 5% in addition to minimum repayment, you're actually cutting their minimum profit targets. So they would get the money back or they're going to fine you, right? And second type of early repayment fee is from the wholesale break mechanism. What does that mean? So when you sign a contract with the bank for fixing 1 year or 2 year mortgage rate, the bank would also sign a contract on the market to borrow the money for the same term, 1 year or 2 years, from we call it wholesale market. This is a little bit like ordering a pizza, right? In a restaurant, you order the pizza, but if you cancel before it's ready, but the chef might already been cooking it in the oven, then the restaurant still has to pay for the ingredients, right? So if you break the fixed term loan, the bank is somehow stuck with the bill. All they need to do is basically pass it on to you. That's all.